Good day everyone, I'm Daphnie Barola and I'm going to report about the chapter 4 which is the revaluation. So subsequent measurement, revaluation model. So necessity of revaluation. When the fair value of a revalued asset differs materially from its carrying amount, a further revaluation is required. Frequency of revaluation, significant and volatile changes in fair value, annual revaluation. While in the insignificant changes in fair value, revaluation every 3 or 5 years. So, revaluation of depreciable PPE. So, nasa dyan historical cost, replacement cost, and appreciation. And then, sa equipment og accumulated depreciation. So, sa historical cost, ang idyahang value is the carrying value. And then, sa replacement cost, sound value, and sa appreciation mo na nasa dyan ang revaluation surplus. So, dito sa journal entry. First is sa revaluation sa proportional side sa equipment equal siya to the amount in the appreciation. So, debited siya. Accumulated depreciation 1 and ang revaluation surplus mo siya ang credited. Well, sa elimination, equipment equal to the revaluation surplus debited and then revaluation surplus nga credited. So, napos siya kanang sumpay accumulated depreciation nga debited o equipment nga credited. So, there is sa journal entry sa depreciation. So, sa proportional, depreciation siya is debited and then ang accumulated depreciation is credited. Sa elimination, same ra gihapon siya sa proportional nga side. And then, there is a piecemeal realization of revaluation surplus. Imuhang debit is revaluation surplus and ang imuhang credit is retained earnings. So, same ra po siya sa ang elimination, same ra po sa proportional. And then, there na po sa the recognition of PPE. Revaluation surplus mo tong remaining balance mo to'y debited. And then, sa retained earnings mo'y credited. So, sa elimination side, same ra po siya sa proportional. So now, let's proceed to the illustration for revaluation disregarding tax implications. So an entity acquired a building on January 1, 2018 at a cost of 10 million pesos. The building had a useful life of 6 years and residual value of 1 million pesos. The building was revalued on January 1, 2021 and the revaluation revealed replacement cost of 15 million pesos, residual value of 2 million pesos, and revived useful life of 8 years from the date of acquisition. So let's proceed to the required. So first, what is the revaluation surplus on January 1, 2021? The second, what is the revaluation surplus on December 31, 2022? And the last one, prepare all the necessary entries on 2021. Dito sa requirement number 1. So, dire, what is the revaluation surplus on January 2021 ang gipangita. So, mo ang solution. So, sa building, ang cost model niya is 10 million pesos. Mo tong first niya nga value or cost. Ano siya yung first cost. And then, nag-revaluation man. So, mo tong 15 million pesos. So, i-minus na mo siya ang cost model sa revaluation model. So, na ay appreciation nga 5 million pesos sa building. So, there is accumulated depreciation 4,500,000 pesos o sa revaluation model 6,500,000 pesos. So, ang explanation nga na is ang kaning sa 4,500,000 pesos. So, kung ano siya ang accumulated depreciation, ang cost which is ang 10 million, i-minus nimo siya sa salvage value, which is ang gani siyang 1 million pesos. So, imo siyang i-minus, and then, i-divide nimo siya sa useful life. So, ang useful life niya is 6 years. And then, i-times nimo sa 3, tungod kay, ang diri January 2018, na revalue siya 2021 na. So, 3 years lang nakalabay. So, mao to nga naa kay accumulated depreciation sa cost model nga 4,500,000 pesos. Ang kanipod sa revaluation model nga 6,500,000 pesos, kung saan siya? Accumulated depreciation equals revalued amount na kato ng bagong amount which is ang katong 15 million pesos. And then, mag-minus ka sa 2 million pesos nga salvage value. and then i-divide gyapon nimo sa useful life, and then i-times sa 3. So na mo gawas nga 6,500,000 pesos. So imo ni siya i-minus ang duha, so na mo gawas nga appreciation sa accumulated depreciation nga 2 million pesos. And then i-minus nimo ang sa appreciation sa building o accumulated depreciation, so na mo gawas nga 3 million pesos. And then ang cost model pod, ang balance sa cost model o sa revaluation model, o i-minus pa nimo silang duha, ang magawas pod is 3 million pesos. So proceed na ta sa requirement number 2. Ang sa requirement number 2, ang gipangita is ang revaluation surplus sa December 31, 2021. So revaluation surplus pagka January 1, 2021, katong 3 million pesos kanina siya. And then magless ka sa piecemeal realization, mauni siya 600,000 pesos. And then imo na siyang iles, so naa kay revaluation surplus pagka December 31, 2021 nga 2,400,000 pesos. So ang kuani nga na masadyon siya nga anong computation is 3 million, which is kaning sa balance sa kanang January 1, 2021. Imo ni siyang i-divide og 5 years, and then i-times po mo sa 4 years. So na mo gawas nga 2,400,000 pesos. So karon diri na ta sa requirement number 3. Entries to be recorded in 2021 included the following. So pagka January 1, 2021, ang building moning 5 million pesos. And then ang accumulated depreciation nga 2 million pesos o revaluation surplus, which is ang 3 million pesos. And then sa December 31, 2021, ang entries na is ang depreciation 1.3 na laman, 1,300,000 pesos, and then ang accumulated depreciation moning 1,300,000 pesos. So ang pag-compute sa accumulated depreciation man siya ang 8.5 million i-minus nimo sa 2 million, and then i-divide nimo sa 5 years. So na mo gawas nga 1,300,000 pesos. And then sa revaluation surplus katong 600,000 pesos, and then retained earnings nga 600,000 pesos. Ang pag-compute pud nga na is ang katong 3 million i-divide nimo sa 5 years. Mo nang 5 years siya tungod kay nagamit naman ang 1 year. So diri na ta sa illustration sa revaluation considering tax implication. So on January 1, an entity showed land with carrying amount of 5 million and building with cost of 30 million pesos and accumulated depreciation of 9 million pesos. The land and the building were revalued on same date and revealed the fair value of land at 7,500,000 pesos and the building at 35,000 pesos. The original useful life of the building is 20 years and depreciation is computed on the straight line. The income tax rate is 30%. So, required. First, what is the revaluation surplus on January 1, 2021? Second, prepare all the necessary entries in 2021. And the last requirement is what is the deferred tax liability on December 31, 2021. So, here is the solution. So, requirement number 1, ang land, ang cost model niya is 7,500,000 pesos. And then, i-revalue naman siya sa revaluation model, mananing 5 million pesos. So, imo na siya i-minus. Ang appreciation sa land is 2,500,000 pesos. So, sa building, muna siya 30,000 pesos, and then nag-revaluation na po siya o 50,000 pesos. So, i-minus na po din mo siya, so na-ay appreciation sa building na 20,000 pesos. So, sa accumulated depreciation nga 9 million sa cost model, and then ang sa revaluation model na apoy 15 million, and then ang imo na siya i-minus, so na-ay 6 million. So, pag-compute sa accumulated depreciation, nga ninasad siya. Ang cost value, same or gyapon sa procedure sa kinahanglan. So, ang cost niya sa kinahanglan is 30 million pesos. So, i-minus nimo siya sa salvage value. So, wala pa man siya salvage value tungod kay same day raman siya pod gi-reveal. So, matong 0. And then, i-divide mo si Ja sa 20, which is ang katong useful life ni Ja. And then, i-times sa age. Ja, pa man po si Ja age. Kay tungod kay, same day, lagi po si Ja na, na-revealed. So, imo na si ang 30 million, i-minus nimo sa 0. So, what? So, 30 million gyapon. And then, i-divide mo sa 20. So, na ay 9 million pesos. So, from this, we can compute for the number of years the asset was used by dividing accumulated depreciation, which is katong 9 million, with the annual depreciation katong 1,500,000 pesos. So, ang katong 30 million pesos, i-divide mo sa 20 years. So, mo tong result ni Ja, mo to si Jang 6 years siya amo gawas. And then note nga, the asset has a remaining useful life of 14 years. Kibali, sa kato siya nga process, kibali, 6 years ra ang result kibali. So, kanang ang useful life is 14 years na laman, or is 30% depreciated since it was already used for 6 years out of the total useful life of 20 years. So, nagamit naman ang 6 years, mo tong 14 years na naman ang remaining useful life. So, mo na ni si Jan, no? Imo na ni si Jan i-plus na nimo si Jan, i-minus rather, i-minus na nimo si Jan ang cost model sa revaluation model, and then, ang diri po sa appreciation, i-minus na nimo ang building og sa accumulated depreciation. So, ang 21 million, i-minus nimo sa 35 million, motong ang result is 14 million pesos. And then, ang 20 million, i-minus po nimo sa 6 million na po'y 14 million pesos. So, dirita sa requirement number 2. So, entries to be recorded in 2021 include the following. So, pag January 1, 2021, ang building, motong 20 million pesos. And then, sa accumulated depreciation, 6 million, then revaluation surplus, which is katong 14 million, i-times nimo sa 70%, muning 9,800,000. Ang kaning 40 million, di ba? Ang ato ang sa wa pa na ni, di ba, 20 million to. So, i-minus man nimo sa kanang 6 million nga accumulated depreciation mo, tong 14 million na laman si Ja, kani si Ja. Ba? Ang sa revaluation surplus mo ting 14 million kani, and then ang kaning 70% mo ni nalaman si Ja ang remaining percentage. So mo tong 9,800,000, and then deferred tax liability na si J tax nga 4,200,000 pesos, and then imo na si Jang i-total na overall nga 20 million pesos. So dali na pud sa land, ang sa land mao na lang ning nabilin nga 2,500,000 pesos kani si Ja. And then, sa revaluation surplus, katong 2.5M, i-times na po mo sa 70%. So, mukam up si Ja og 1,750,000 pesos. And then, sa revaluation surplus gyapon nga 2.5, then i-times mo sa 30%, mo tong 750,000 pesos. So, balance gyapon si Ja. So, dito sa December 31, 2022, depreciation expense nga 2,500,000 pesos. And then, accumulated depreciation mo tong 35 million, i-divide mo sa 14 years. So, na ay 2,500,000 pesos. And then, revaluation surplus nga 700,000 pesos. And then, retained earnings katong 9.8 million, i-divide po nimo og 14 years. So, na ay 700,000 pesos. And then, deferred tax liability na ay 300,000 pesos, and then in net income tax expense nga katong sa 4.2 million, i-divide na po din mo sa 14 years, muning 300,000 pesos. So, proceed tar sa requirement number 3. Requirement number 3. The balances of revaluation surplus and deferred tax liability at the end of 2021 are summarized below. So, sa revaluation surplus sa building, sa pagka-January 1, 2021, 9,800,000 pesos. So, reduction nga 700,000 pesos. So, pagka December 31, 2021 na, ang nabili na lang sa building is 9,100,000 pesos. And then sa land, pagka January 1, 2021, na ay 1,750,000 pesos, and then wala si Jai reduction. So, nagihapon pagka December 31, 2021 nga, 1,750,000 pesos. And then, imo si Jang i-total, imo si Jang i-add. So, ang sa land, sa building ang sa land, na ay 11,550,000 pesos. Sa reduction na aray 700,000 pesos. So, imo po na si Jang i-minus. So, na ay magawas nga 10,850,000 pesos. So, sa deferred tax liability na po sa building na ay 4,200,000 pesos sa pagka January 1, 2021. Pagka maglas ka sa reduction na 300,000 pesos, so pagka December 31, 2021 na, ang naibili na lang sa building is 3,900,000 pesos. And then sa land, pagka January 1, 2021 na ay 750,000 pesos. And then, what man po yung CJ reduction. So, remaining gihapon siya pagka December 31, 2021 nga 750,000 pesos. So imo na po siya i-add 9,950,000 pesos, and then there is a reduction nga 300,000 pesos. Then imo na siya i-minus, so naa na lamay 4,650,000 pesos. So, proceed ta sa illustration sa revaluation. So, on January 1, 2021, the following data was gathered regarding the revaluation of the equipment of Octavio Company. So, equipment, ang cost niya is 6 million pesos. And then, ang replacement cost niya is 9,600,000 pesos. And then, ang accumulated depreciation, So, proceed na ta sa illustration sa revaluation. So, on January 1, 2021, the following data was gathered regarding the revaluation of the equipment of Octavio Company. The equipment, ang cost niya is 6 million pesos, and then replacement cost nga 9,600,000 pesos. And then, accumulated depreciation nga 1,500,000 pesos, and age of the asset, which is ang 5 years. So, required, assume the following independent cases. So, sa case number 1, using the original data. So, first requirement, what is the original life of the equipment? Second, how much is the revaluation surplus on January 1, 2021? Third, how much is the revaluation surplus on December 31, 2021? Fourth, how much is the depreciation in 2021? Fifth, on January 2, 2022, the equipment was sold for cash at 6,900,000 pesos. How much is the gain or loss of sale? And then the last one, ika-uno, prepare all the necessary entities in 2021 up to the date of the sale. And then sa case number 2, assume instead that at the date of revaluation, the residual value is 30,000 pesos. So first, how much is the revaluation surplus on January 1, 2021, and the second one is how much is the revaluation surplus on December 31, 2021, and the last one, how much is the depreciation in 2021. So here is the solution. So sa case number 1, sa requirement number 1, ang accumulated depreciation equals sa cost minus sa salvage value, and it divides sa useful life times age. So diri diba, sa case number 1, 1,500,000 ang accumulated depreciation. So, ang cost is 6 million pesos. And then, what si Jay salvage life? Onja, ang age ni Jay is 5. And then, what si Jay useful life? So, kibali, mong pangitaon dari ang useful life. So, ang 1,500,000 pesos, i-times mo sa useful life. So, ibalhin mo si Jay dari. And then, ang 6 million pesos, i-times mo sa 5, so na ay 30 million pesos. So, i-divide mo both sides sa 1,500,000 pesos. So, imo na siyang i-cash out, and then, i-divide mo ang 30 million sa 1,500,000 pesos. So, ang useful life niya is 20 years. So, sa requirement number 2, dali sa equipment, ang cost ni Jamo tong 6 million pesos. And then, replacement cost nga 9,600,000 pesos. So, ang appreciation niya is 3,600,000 pesos. And then, ang accumulated depreciation na ay 1,500,000 pesos. And then, so, sa pagkuha na sa kanidiri ang side, so, ang 3,600,000 pesos, i-minus nimo sa 1,500,000 pesos. So, na mo gawas nga 2,400,000 pesos. And then, ang 1,500,000 pesos, i-minus po nimo sa 2,400,000 pesos. So, na mo gawas po nga 900,000 pesos. So, imo na po niya i-minus. So, na ay 2,700,000 pesos. And then, i-minus po nimo ang sa cost of sa replacement. So, na po mo gawas nga 2,700,000 pesos. So, ma-proceed ta sa requirement number 3. So, revaluation surplus pagka January 1, 2020, January 1, which is kating 2,700,000 pesos. So, ang mag-less ka sa piecemeal realization katong 2.7M, mag-divide ka sa 15 kibale. So, naay mo gawas nga 180,000 pesos. So, ang revaluation surplus pagka December 31, 2021, muna ning 2,520,000 pesos. So, let's proceed to requirement number 4. Depreciation on cost, which is katong 4,500,000, 4.5M, i-divide na po din mo sa 15, katong 20 minus 5. So, na mo gawas nga 30,000 pesos. And then, depreciation on appreciation, katong 2.7 divided by 15, mo tong 180,000 pesos. So, ang total depreciation na pagka 2021 mo na ning 480,000 pesos. So, requirement number 5, net selling price ni Ja, which is katong 6,900,000 pesos. And then, maglas na pagka sa carrying amount mo tong replacement cost. So, naaning 9,600,000 pesos. And then, maglas na pagka sa accumulated depreciation. Mo ni si Jang pagka January 1, 2021 after sa revaluation na. So, na ay 2,400,000 pesos. And then, pag depreciation po sa 2021, kani si Ja, sa babaw, so na ay 480,000 pesos. So, imo na si Jang i-minus tanan. So, na ay sa tanang less, sa tanang imong ilas, morning si Ja, 6,720,000 pesos. So, imo si Jang ilas, so naa na may gain on sale nga 180,000 pesos. So, requirement number 6, mo na si Jang katong entries. So, January 1, 2021 equipment na ay 3,600,000 pesos, accumulated depreciation nga 900,000 pesos, and revaluation surplus nga 2,700,000 pesos. And then, pagka January 31, 2021 na, depreciation expense katong 7.2M divided by 15, so na 480,000 pesos, and then accumulated depreciation nga 480,000 pesos. And then, revaluation surplus na 180,000 pesos, and then retained earnings nga 180,000 pesos. So, pagka January 12, 2022, ang cash is 6,900,000 pesos. And then, accumulated depreciation nga 2.4M, i-plus nimo sa 480,000 pesos. So, na yung gawas nga 2,880,000 pesos. And then, equipment nga 9,600,000 pesos. And then, gain on sale nga 180,000 pesos. And then, revaluation surplus nga 2,520,000 pesos, and retained earnings nga 2,520,000 pesos. So, last na, case number 2, requirement number 1. So, sa equipment, ang cost ni Jamo tong 6 million pesos, and then replacement cost nga 9,600,000 pesos. So, ang accumulated depreciation 1,500,000 pesos, and then na-appreciation nga 3,600,000 pesos. Ang kaning 3,600,000 pesos, gikan ni si Ja sa dire si Ja 6 million minus sa 9,600,000, so na ay 3,600,000 pesos. Kani po si Ja, mo ni si Ja ang computation. So ang 9.6M i-minus nimo sa 300k, i-times nimo sa 5 over 20, so na ay 2,325,000 pesos. So imo na po ni si Ja i-minus ang duha, so na imo gawas nga 825,000 pesos. So, ang total na naman sa January 1, 2021 na ay 2,775,000 pesos. So, requirement number 2, revaluation surplus January 1 mao ni si jang 2,775,000 pesos. So maglast na pud ka sa piecemeal realization katong 2.775 m i-divide po nimo sa 20 minus 5, so naay 185,000 pesos. So imo na sa jang iles, so naa na lamang ka revaluation surplus pagka December 31, 2021 nga 2,590,000 pesos. So requirement number 3, depreciation on cost katong 4.5 m minus nimo sa 300k. So i-divide po nimo sa 15. So na 280,000 pesos. So depreciation on appreciation nga 2.775 m i-divide po nimo sa 15. So na 185,000 pesos. So ang total depreciation nimo sa 2021 muna ni si jang 465,000 pesos.
Good day everyone, I am Andrea Palomar and I am going to report impairment of assets. So what is impairment? Impairment occurs when the carrying amount of an asset of cash generating unit exceeds the recoverable amount. Recoverable amount is the higher between value in use and fair value less cost of disposal. We have here an illustration of impairment and revaluation of PPE. On January 1, 2019, Donald Company acquired two classes of property, plant and equipment. Data relating to the asset follow. Machinery has a useful life of 5 years, which cost 1 million, and office equipment has a useful life of 4 years, which cost 500,000. Both are depreciated in the straight line method. The company uses the cost model for the machinery and evaluation model for the office equipment. On January 1, 2020, the following are the recoverable amounts of the assets. Machinery, 900,000. Office equipment, 498,000. On January 1, 2021, the following are the recoverable amounts or fair values of the assets. Machinery, 500,000 and office equipment, 247,000. First requirement is to compute the total depreciation in 2019. To compute the total depreciation, the cost of PPE is divided by its useful life and then multiplied by the number of months. So for machinery, 2 million divided by 5 years times 12 over 12 is equal to 400,000. And for office equipment, 1 million divided by 4 years times 12 over 12 is equal to 250,000. The total depreciation in 2019 is 650,000. Requirement number 2 is the total revaluation surplus on January 1, 2020. Machinery, which is cost 2 million, less accumulated depreciation, which is 400,000, is equal to 1,600,000. Mao ni nga atong book value. Then, iless ni siya sa atong recoverable amount, which is 1,400,000. Nakuha ni siya sa katong recoverable amounts pagkat 2020 o 2021 nga 900,000 o 500,000. Gi-add ni siya, mas dako ni siya o mas dako ang fair value kasa sa value in use. Then, imo na siya i-minus, ang impairment loss is 200,000. Sa office equipment, nag-cost siya of 1 million less ang accumulated depreciation, which is katong 250,000. I-minus siya ang book value nato kay ang 750,000. Then, iless ni siya sa atong recoverable amount, which is 600,000. So, ang atong impairment loss is 150,000. Then, ato i-total ang impairment loss sa machinery o sa office equipment. So, ang total impairment loss is 350,000. Next requirement is to compute the total depreciation in 2020. So, machinery, ang recoverable amount is 1,400,000. So, i-divide siya sa remaining life niya, which is 4 years. So, ang depreciation expense pagka 2020 is 350,000. And pagka office equipment, dito na siya sa iyang recoverable amount na listate no. pagka January 1, 2020, which is 600,000. So next requirement is the total impairment loss in the income statement in 2021. So to compute the total impairment loss sa machinery, i-record ang recoverable amount which is 1,300,000. Then, i-compute sad ang value in use which is ang cost na 2 million less sila sa accumulated depreciation nga 800,000. So, giunsa man pagkuha ng 800,000. So, pagkuha na is 2 million, i-divide sila sa 5 years nga useful life, i-times sila sa 2 years na kay 2020 o 2021 naman. Maong 800,000. So, i-minus ni sila, makuha is 1,200,000. Then, ang record sa increase carrying amount man kay ang lower figure. So, ang atong i-record is ang 1,200,000. Ni-less pa ni sila sa actual book value pag January 1, 2021. Katong revalued amount nga 1,400,000 which is katong 900,000 o 500,000. Onya, ilas sa subsequent depreciation which is 350,000 mao atong gi-compute pagka sa requirement number 1. I-minus ni siya matong 1,050,000 na sa actual book value. So 1,200,000 minus 1,050,000 is equal to gain on impairment recovery which is 150,000. So, sa office equipment, ang cost niya is 1 million, less niya sa accumulated depreciation niya which is 250,000 per year times 2 kay 2 years naman, so 500. So, it equals to 500,000. Then, ang iyang actual book value pag January 1, 2021 is ang revalued amount niya nga 600,000, less niya sa iyang subsequent depreciation na 200, mga 400,000. So, ang 500,000 minus 400 is equal to 100,000. Mao ni iyang gain on impairment recovery. So, ang gain on impairment recovery sa machinery which 150,000 i-add sa 100,000. So, total gain on impairment recovery is 250,000. So, na-note na the increased carrying amount is the lower between the fair value or the would have been book value had no impairment loss been recognized because according to PAR 117 of PAS 36, the increased carrying amount of an asset other than goodwill attributable to a reversal of impairment loss shall not exceed the carrying amount that would have been determined had no impairment loss been recognized for the asset in prior years. So the next requirement is the remaining revaluation surplus on December 31, 2021. So, ang sa office equipment man ang gigamit ng evaluation model. So, office equipment ra. So, yung fair value is 700,000. Yung less would have been book value is 500,000. Mao na yung gi-compute pagka sa requirement number 4. I-minus ni siya, so ang revaluation surplus is 200,000. So, according to paragraph 118 of PAS 36, any increase in the carrying amount above the carrying amount that would have been determined had no impairment loss been recognized for the asset in prior year is a revaluation. Illustration is the impairment of intangible assets. The Samuel Company reported the following intangibles in its unadjusted trial balance on December 31, 2021 Statement of Financial Position. So, patent, 400,000, copyrights, 800,000, trade name, 700,000. So, additional information, the company's accountant determines that the patent has an expected life of 10 years and no expected residual value. The patent is expected to generate cash flows of 45,000 per year for the remaining 9 years. The copyright is expected to generate cash flows of just 35,000 per year. The trade name is expected to generate cash flows of 400,000 per year. The company expects to use the copyright and trade name for the foreseeable future. So based on the data, determine the following. Assume that the appropriate discount rate for all items is 5%. One is impairment loss of the patent, if any, and two, impairment loss of the copyright, if any. So, first requirement is impairment loss of the patent. So, ang cost sa patent is 400,000. Less nisija sa iyang accumulated amortization, which is 400,000 divided by 10, which is iyang useful life. So, 40,000. So, i-minus nisija. So, ang carrying value is 360,000. Unja iles nisija sa recoverable amount, which is 45,000 katong iyang ma-generate yung cash flows times 7.1078. So, equals to 319,851. Gikuha ning 7.1078 sa formula sa present value of annuity. Mana. So, i-minus is just sa carrying value minus recoverable amount. So, natay impairment loss na 40,149. So, requirement number 2, impairment loss of the copyright. So, carrying amount niya is 800,000. And less just sa recoverable amount, which is 35,000 to iyang ma-generate na cash flows, it divides up 5% is equal to 700,000. So, i-minus siya. So, ang atong impairment loss is 100,000. Next requirement is impairment loss of the trade name, if any. So, ang carrying amount niya is 700,000. I-less ni siya sa recoverable amount, which is 40,000. So, gikuha ning 40,000 sa 400,000 niya nga ma-generate na cash flow. I-divide sa 10 useful years mo ang 40,000. I-divide siya of 5% is equal to 800,000. So, ani, what siya impairment loss? No impairment loss for the trade name since the recoverable amount is greater than the carrying amount of the asset. So, requirement number 4, total carrying amount of intangible assets on December 31, 2021. So, patent equal to the recoverable amount, 319,850. Trade name equal to the recoverable amount, 700,000. Copyright equal to the carrying amount, 700,000. Imo siya E+. So, the total carrying amount of the intangibles is 1,719,851. Last requirement is the prepare all the necessary entries to record the amortization and impairment. So, 1. Debit amortization of patent, 40,000. Credit accumulated amortization, 40,000. To record amortization of patent. Next, debit impairment loss, 40,149. Credit accumulated impairment loss, patent, 40,149. To record impairment loss of the patent. Next is debit impairment loss, 100,000. Credit accumulated impairment loss, copyright, 100,000. To record impairment loss of the copyright. Next illustration is the impairment of cash generating unit. At the end of 2019, Health Advocate Company acquired Muddy Wellness Pass Company for a total purchase price of 100 million pesos. Muddy Wellness Pass operate 3 health resorts in 3 different locations in Laguna. The main activity of each health resort is providing medical care by utilization of natural resources such as healing springs and local healing mud. Each resort also provides additional services such as wellness procedures, sport and leisure activities, etc. These additional services generate only minor part of total revenues that strongly depend on main activities, as clients usually come to resorts due to healing springs or mud. Health Advocate Company considers each health resort as separate cash generating unit. In 2021, water analysis in health resort in Pansol showed slight contamination that needs to be treated carefully. However, due to news in media, number of customers in Pansol resort severely dropped. So the financial data is provided in the screen. Pause to read. So last requirement is calculate and allocate impairment loss on a group level. So, unahan sa nato ang calculation of impairment loss. So, yung carrying amount based sa given is 36,550. Less ni siya sa recoverable amount higher between fair value less cost to sale and value in use. So, mas dako mang fair value less cost to sell which is 20,500. So, money atong i-record. I-minus ni sila, so ang atong impairment loss is 16,050. Next is allocation of impairment loss. So, impairment loss na 16,050, less ni siya sa loss allocated in goodwill. Then siya sa financial data sa previous slide. So, 6,000 dito. So, i-minus ni siya. So, ang remaining loss to be allocated to identifiable assets is 10,050. Next is, i-copy ra nimo ang list sa assets o ang iyang carrying amount. Provided na ni siya sa financial data sa previous slide. And then, imo i-total ang carrying amount sa tanang assets, which is 30,550. And next sa table is ang percentage of total value. Ang pagkuha ani is ang carrying amount sa usa ka asset i-divide ni siya sa subtotal mao ang percentage of total value. So ang Healing Springs with land nga iyang carrying amount is 11,700 i-divide ni siya sa subtotal nga 30,550. Ang answer ana is 0.38.3 and imo ni siya percentage to 38.3. Same sa di sa pagkuha sa source of healing mud, spa facilities, sport or leisure facilities, administrative buildings, and other PPE. Dapat ang percentage of total value, if imo siya i-plus, mo total siya og 100%. Next is the allocated impairment loss. Ang pagkuha ani is ang percentage of total value i-times ni siya sa remaining loss to be allocated in identifiable assets, which is 10,050. So 10,050 times 0.3830.
Good day everyone, this is Dennis Bongcayao and today I will be discussing the continuation of chapter 24, which is the non-current asset held for sale. The classification, or when you should classify an asset as held for sale. An entity shall classify a non-current asset or disposal group as held for sale if its carrying amount will be recovered principally through a sale transaction rather than through continuing use. In general, the following conditions must be met for an asset or disposal group to be classified as held for sale. Number 1. The asset or disposal group must be available for immediate sale in its present condition, subject only to terms that are usually and customary for sales of such assets or disposal groups. Number 2. Its sales must be highly probable. So for the sale to be highly probable, the management must be committed to a plan to sell. Kaduha, active program to locate the buyer initiated. Katulong, asset is marketed at a reasonable price, and ikaapat, the sale should be expected to qualify for recognition as a completed sale within 1 year. The assets need to be disposed of through sale, therefore operations that are expected to be wound down or abandoned would not qualify the definition. How should we measure an asset held for sale? So, an asset held for sale do not apply to deferred tax assets under IAS 12, assets from employee benefits IAS 19, financial assets IFRS 9, investment property at fair value model under IAS 40, non-current assets at fair value cost to sell under IAS 41 and contractual rights insurance contracts under IFRS 4. So the main principle of an asset held for sale, the measurement must be at lower of its carrying amount and fair value less cost to sell or fair value less cost to distribute. Now let's break down what should we do before classification and after classification of an asset held for sale. So with regards to asset itself or the disposal group itself, so immediate before we classify an asset held for sale, we should measure it in line with applicable IFRS. And after classification, so it should be at lower of the carrying amount and fair value cost to sell. And what about the impairment? So before classification, also we measure it in line with the applicable IFRS and recognize profit or loss or other comprehensive income if applicable. After its classification, so we'll recognize the adjusted carrying amount and fair value less cost to sell, and always recognize the profit or loss. So in a non-current asset held for sale, so we do not charge any depreciation. Next is discontinued operation. So a discontinued operation, it is a component of an entity that either has been disposed of or is classified as held for sale. And it is also a separate major line of business or a geographical area. It is also a part of plan to dispose of it and or a subsidiary acquired to resale. So a discontinued operation, so the component of an entity that is a cash generating unit. The presentation of discontinued operations for the statement of comprehensive income. So single amount comprising of the post-tax profit or loss of discontinued operations and post-tax gain or loss on the measurement or disposal. Another presentation is the analysis of the single amount in the notes or the statement of other comprehensive income. For the statement of cash flows, the net cash flows attributable to the operating, investing, and financing activities of a discontinued operation, and it can be presented in the notes. For the statement of financial position, it presents separately on the face of the statement of financial position. So assets are classified as held for sale, and assets and liabilities in the disposal group classified as held for sale. So we have here an example of illustration for the non-current assets held for sale single asset and cost model. On January 1, 2021, Recife Corporation decided to sell a machinery with a cost of 600,000 pesos and accumulated depreciation of 240,000 pesos. Depreciation of 5,000 per month has been provided by the company since it was acquired. The company accounts for this machinery using the cost model. The machinery will continue to be operated until sold. The company undertook all the necessary actions to be able to classify the asset as held for sale. On the same date, the fair value of asset amounted to 310,000 pesos, while the cost to sell the total of 10,000 pesos. On March 31, 2021, the plant had not been sold, but there has been objective evidence that the fair value went up to 410,000 pesos. On July 1, 2021, Recife Corporation sold the machinery for 620,000 pesos after incurring selling cost of 20,000 pesos. So these are the following requirements that will answer the problem. So requirement number 1, how much is the impairment loss to be recognized on January 1, 2021? Number 2, how much is the depreciation expense in 2021? Number 3, how much is the gain to be recognized in the profit or loss as a result of increase in the fair value of the asset? Number 4, how much is the net gain or loss on the sale of asset? For requirement number 1, how much is the impairment loss to be recognized on January 1, 2021? So this is the solution for requirement number 1. For the cost of the machinery amounting to 600,000 pesos less the accumulated depreciation amounting to 240,000 pesos, and atong makuha ang carrying amount na 360,000 pesos. Ug ato pong i-deduct ang amount sa ijang initial recognition amounting to 300,000 pesos. So atong makuha ang impairment loss na 60,000 pesos. So amount at initial recognition is the lower between fair value less cost to sell of 300,000 pesos minus 10,000 and the carrying amount of 360,000 pesos. Number 2, how much is the depreciation expense in 2021? So 0, there is no depreciation when the asset is classified as non-current asset held for sale. Number 3, how much is the gain to be recognized in a profit or loss as a result of an increase in the fair value of the asset? So lower between subsequent fair value less cost to sell and original carrying amount. So the carrying amount is 360,000 pesos and the fair value less cost to sell is 400,000 pesos. So we deduct the carrying amount less carrying amount at initial recognition, which is 300,000 pesos. So ato makuha ang gain on reversal amounting to 60,000 pesos. Requirement number 4, so how much is the net gain or loss on the sale of the asset? So net selling price, which is 600,000 pesos. So on July 1, Fed Corporation sold the machinery for 620,000 pesos and incurring selling cost of 20,000 pesos. So atong i-deduct ang 20,000 pesos na selling cost. So atong net selling price is 600,000 pesos less the carrying amount, which is 360,000 pesos. So atong makuha ang gain on sale na 240,000 pesos. So another illustration for non-current assets held for sale disposal group. On December 31, 2021, the following data are available of assets formed as disposal group under PFRS number 5 for Diana Maria Corporation. So we have the carrying amount before classification as held for sale. So inventory, 2 million, investments, fair value through other comprehensive income, 4 million, property, plant, and equipment at cost model, 3 million, property, plant, and equipment at revaluation model, 6 million, goodwill, 1 million, the total of 16 million pesos. For CV as remeasured immediately before classification as held for sale, inventory 1,900,000 pesos, investments fair value through other comprehensive income 3,950,000 pesos, property, plant, and equipment at cost model 3 million, property, plant, and equipment at revaluation model 5 million pesos, goodwill 1 million pesos, the total of 14,850,000 pesos. The fair value less cost to sell of the disposal group amounted to 12,850,000 pesos, while the revaluation surplus of the property, plant, and equipment at the revaluation model before classification as held for sale and before measurement is 800,000 pesos. So these are the following requirements to answer the data above. Number 1, how much is the carrying amount of the inventory after classification of the disposal group as held for sale? How much is the carrying amount of the fair value through other comprehensive income after classification of the disposal group as held for sale? How much is the impairment loss to be allocated to goodwill? How much is the impairment loss to be allocated to PPE at cost model? And how much is the impairment loss to be allocated to property, plant, and equipment at revaluation model? So these are the solutions. So impairment loss before measurement under PFRS 5 is carrying amount before classification as held for sale amounting to 16 million pesos, less CV as remeasured immediately before classification as held for sale amounting to 14,850,000 pesos. So makuha nato ang impairment loss before measurement under PFRS 5 amounting 1,150,000 pesos. Additional impairment loss upon initial recognition under PFRS 5. So total carrying amount before impairment amounting 14,850,000 pesos, less fair value less cost to sell amounting 12,850,000 pesos. So we get the impairment loss amounting 2 million pesos. So ato pong i-deduct ang impairment loss allocated to goodwill amounting to 1 million pesos. So ang atong impairment loss allocated to other assets is 1 million pesos. PPE at cost model for the carrying amount as remeasured amounting 3 million pesos and PPE at revaluation model which is 5 million pesos. So ang total carrying amount as remeasured is 8 million pesos. Ang atong gamiton na ratio sa PPE at cost model is 0.375 and PPE at revaluation model is 0.625. Ang allocated decrease sa PPE at cost model is 375,000 pesos and PPE at revaluation model is 625,000 pesos. Ang total allocated decrease is 1 million pesos. Ang impairment loss before reclass sa PPE at cost model is 0. So, and PPE at revaluation model sa impairment loss before reclass is loss na 200,000. Impairment loss pod sa PPE at cost model is 375,000 pesos and PPE at revaluation model is 825,000 pesos. So, ang total impairment loss is 375,000 pesos plus 825,000 pesos is equals to 1,020,000 pesos. The impairment loss before reclassification to held for sale category is for the PPE at revaluation model which is computed as follows. So carrying amount before reclassification as held for sale amounting 6 million pesos less the carrying amount as remeasured immediately before reclassification as held for sale amounting 5 million pesos. So atong makuha ang revaluation decrease is 1 million pesos. So po i-deduct ang nabilin nga revaluation surplus amounting 800,000 pesos. So, ang atong additional impairment loss is 200,000 pesos. For the CV after allocation of impairment loss, so ang inventory is 1,900,000 pesos. Investments fair value through other comprehensive income na 3,950,000 pesos. And sa PPE at cost model, 3 million minus 375,000 pesos, then makuha na to ang amount nga 2,625,000 pesos. Sa PPE, or the property, plant, and equipment at revaluation model, so minus ang 5 million minus 625,000 pesos, so makuha na tong amount nga 4,375,000 pesos. Kay wa man tay goodwill, so ang atong total CV after allocation of impairment loss amounting to 12,850,000 pesos. So to answer the questions, so how much is the current amount of the inventory after classification of the disposal group as held for sale? So the answer is carrying amount of the inventory is 1,900,000 pesos. Next, how much is the carrying amount of the fair value through other comprehensive income after reclassification of the disposal group as held for sale? So the carrying amount of the fair value through other comprehensive income is 3,950,000 pesos. How much is the impairment loss to be allocated to goodwill? Impairment loss is to be allocated to goodwill is 1 million pesos. And how much is the impairment loss to be allocated to property, plant, and equipment at cost model? Impairment loss to be allocated to PPE at cost model is 375,000 pesos. The last requirement is how much is the impairment loss to be allocated to PPE at revaluation model. So the answer is the impairment loss to be allocated amounting to 825,000 pesos.
So good day everyone. Today I am going to discuss my part of the topic about the chapter 25, which is substantive test of liabilities. So substantive tests of liabilities are procedures performed by auditors to assess the accuracy, completeness, and validity of liabilities reported in a company's financial statements. This test involves in examining evidence to ensure that liabilities are properly recognized, measured, and disclosed in accordance with accounting standards. Key aspects of substantive test of liabilities including confirming balances with creditors, reviewing supporting documentations such as contracts and invoice, analyzing the reasonableness of reported amounts, testing for completeness, evaluation contingent liabilities, and considering subsequent events. Overall, substantive tests of liabilities help auditors verify the reliability of financial reporting related to a company's obligations. So there are 5 audit objectives. So number 1 is existence. All liabilities listed on the Statement of Financial Condition are real debts owed to the entity's creditors. Number 2 is completeness. The Statement of Financial Condition contains information of all obligations that the entity had as of the reporting date. Number 3 is valuation and allocation. The necessary quantities of liabilities are shown on the Statement of Financial Condition. So number 4 is the right and obligations. The obligations of the entity as of the reporting date are represented by the liabilities listed in the Statement of Financial Condition. And lastly is the presentation and disclosure. In compliance with the relevant PFRS, liabilities and related accounts are appropriately categorized, explained, and disclosed in the financial statement, including the notes. Audit procedures for liabilities. The auditor's primary substantive procedures for liabilities are includes of this following. First is reconciling general ledger and subsidiary ledger. Second step is performing purchase and accounts payable cut-off. Third is conforming liabilities to debtors. Fourth is inspecting supporting documents such as contracts, invoice, receive reports, and etc. Fifth is searching for unrecorded liabilities. Sixth is testing the accuracy of interest expense, interest payable, and amortization of discount of premium. Seventh is evaluating valuation of liabilities denominated in foreign currencies. Eighth is reviewing compliance with the terms of the debt agreements. Ninth is performing analytical review procedures to liabilities and related account. And lastly, number 10 is evaluating proper financial statement, presentation, and adequacy of disclosure. Reconciliation of subsidiary ledger with general ledger. So the primary audit objectives are completeness and valuation. So the steps involved in reconciling a subsidiary ledger with a general ledger are these following. First is identify accounts to be reconciled. So the second step is extracting ending balances from both the SL and the GL. Third is compare the balances and identify the discrepancies. Fourth is investigate differences by reviewing transaction. Fifth is make necessary adjustment to correct the errors. 6. Reconcile balances by ensuring they match. 7. Is document the reconciliation process. So the 8th step is to review and obtain approvals. And lastly, number 9 is to establish a schedule for periodic reconciliation. These steps ensure that the individual account balances in the subsidiary ledger match the aggregated balances in the general ledger, promoting accuracy and integrity in financial reporting. Purchase and accounts payable cut-off. So the primary audit objectives are existence, completeness, and obligation. The primary purpose of the purchase and accounts payable cut-off process is to ensure the accurate recording of expenses and liabilities in the correct accounting period. This is essential for maintaining the integrity and reliability of financial statements. The auditor tests the accounts payable cutoff by performing its following procedures. Number 1. Obtain and examine invoices from suppliers and other entities and other documentation supporting transactions recorded in the purchase journal and cash disbursement journal immediately before and after the reporting date. Determine whether the transaction were recorded in the proper period, and 2. Review cut-offs in related areas such as purchases and inventories, paying particular attentions to goods in transit. Confirmation of liabilities to debtors. So the primary audit objectives are existence, valuation, and obligations. Confirmation of liabilities to debtors refers to the process of obtaining direct confirmation from creditors or lenders to verify the accuracy and completeness of the liabilities recorded in the company's financial statement. Since the auditors typically discover externally created documentation such as vendor invoices and statements substantiating the liabilities in the client's position, the confirmation of liabilities to debtors is thought to be less important than the confirmation of receivables to customers. Accounts payables. In some cases, however, it may be appropriate to request vendors to confirm the balances owed to them when the following condition existed. Number 1. Controls over the recording of vendors' invoices and receiving reports are ineffective. Number 2. There are few transactions involving large amounts, or number 3. There are numerous old balances. Upon receipt of confirmation replies, the auditors should agree the information confirmed by the creditor to the accounting records and follow up and resolve any differences noted. Notes payable. As compared to accounts payable, notes payable is supported by promissory notes and may be given for a variety of reasons. For example, number 1, purchase of merchandise in the ordinary course of business. Number 2 is in the settlement of the long outstanding amount. Number 3 is in the return for loans from affiliates, shareholders, banks, or other financial institution. Or number 4, to raise money in the short-term money markets. Inspection of supporting documentations. The primary audit objectives are existence, valuation, and obligation. Accounts payable. The auditor must attest to the entries in the purchase journal or voucher register in order to support purchase orders, invoices, received reports, and vouchers. This process goals are to confirm that the quantities recorded exist and to verify that the numbers are accurate. Lease liability. The auditor must inquire with management for new or revised lease contracts and examine the contracts to determine if it is a lease or contains a lease component, considering whether the contract identifies an asset, the entity's right to obtain economic benefits, and the entity's right to direct asset use. For lease contract entered during the year, the auditor must attest the initial measurement of lease liability by examining lease payments, incentives, lease term, discount rate, guaranteed residual value, exercise price, and termination penalties. The auditors independently recalculates the initial measurement of the lease liability, which is the present value of future lease payments. This amount is compared to the entity's recorded lease liability to determine if material misstatement exists. The auditor also evaluates the appropriate measurement of the lease liability following initial recognition using the effective interest method. The ending balance and interest expense are compared to the entity's amount to determine if material misstatements exist. Notes payable and other obligation, short and long term. Auditors should review clients' loan agreements or short-term lending arrangements to understand loan provisions, including authorized amount, interest rates, due dates, asset pledge, and restrictions. They should also extract information related to notes payable and other obligations in financial statements. They should also contact the lender or legal counsel for interpretations of loan agreement, terms, and special provision. Search for unrecorded liabilities. So the primary audit objectives are completeness and obligation. The audit of liabilities aim to ensure all liabilities are included in the financial statement. The search for unrecorded liabilities can only be conducted after the reporting date. The auditor typically performs procedures such as examining files of unpaid or unrecorded invoices, unmatched purchase orders, and unmatched receiving reports, examining significant recorded purchases between the reporting date and the search for unrecorded liabilities, obtaining and reviewing minutes of meetings, and inspecting contracts to identify unrecorded liabilities, reviewing cash disbursement after the reporting date, and requesting the client to make an appropriate adjusting entry for any unrecorded liability identified by the auditor. That's all for my part, and thank you.
Good day, everyone. I am Michaela Villamor, and my report is about the substantive test of liabilities. Test the computation of interest expense, interest payable, and amortization of discount and premium. Primary audit objectives, valuation accuracy. So to test the accuracy of interest expense, interest payable, and amortization of discount and premium, the auditor ordinarily should obtain the interest rate, nominal or effective rate, and recompute the amount reported as interest expense and payable based on the number of months the obligation is outstanding during the current year. So for the long-term debts, example bonds initially issued at a discount or a premium, the auditor computes the amount by preparing an amortization table and comparing it with the amounts recorded. For recurring engagement, the auditor may use the amortization table from the prior working paper. So for the liabilities denominated in foreign currencies, valuation, some of the liabilities of an entity may be denominated in foreign currency because of purchase or loan transaction from a foreign country. As required by PAS 21, the effects of changes in foreign exchange rates. These payables, example monetary liabilities, should be translated using the closing rate and reperforms the translations of the foreign currency denominated payable. The auditor should also ensure that any foreign currency transaction, gain or loss, should be reported as part of profit or loss. Next is review compliance with the terms of debt agreements. Presentation and disclosure. So the auditor should review the entity's compliance with terms, restrictive covenants, or other provisions of debt agreements to determine whether a default or violation of any debt covenant has occurred. If there has been a default or violation of any debt covenants, the auditor should ensure that it is properly disclosed in the notes and the item should be appropriately presented as current liability in the statement of financial position. So next is perform analytical review procedures to liabilities and related accounts. Existence, completeness, obligation, and valuation. So
addition to the audit procedures discussed above, the following analytical review procedures may often be helpful as a means of evaluating the overall reasonableness of liabilities and its related accounts. Example, interest expense, interest payable, etc. So first is the comparison of closing balances of loans and borrowings, creditors, etc. with the corresponding figures for the previous year. Next is comparison of relationship between current year accounts payable balances and the current year purchases with the corresponding figures for the previous year. Third is the comparison of actual closing balances of loans and borrowings, creditors, etc. with the corresponding budgeted figures if available. So fourth is the comparison of significant ratios relating to loans, borrowings, and creditors, etc. with the similar ratios for other firms in the same industry if available. Fifth is the comparison of significant ratios relating to loans and borrowings, creditors, etc. with the industry norms if available. Six is the comparison of the relationship between the current year accounts payable and the current year total current liabilities, with the corresponding figures for the previous year. Seventh is comparison of the relationship between the current year purchase discount and the current year total purchases with the corresponding figures for the previous year. Eighth is the comparison of the current year interest expense to the product of interest expense and average principal of debt outstanding. And lastly is the comparison of current year finance lease expense with the corresponding figures for the previous year. So after performing some comparison, the auditor should investigate any significant differences, unexpected changes, or the absence of expected changes. It may be clarified that the foregoing is only an illustrative list of analytical review procedures which an auditor may employ in carrying out an audit of liabilities. The exact nature of analytical review procedures to be applied in a specific situation in a matter of professional judgment of the auditor. Next is the evaluate proper financial statement presentation and adequacy of disclosure of debt and related transactions, presentation and disclosure. The auditor should review proper financial statement presentation of liabilities, example current versus non-current, trade or versus non-trade. The auditor should ensure that any debit balance of accounts payable or other liabilities, either due overpayment to suppliers, errors, or irregularities, should be appropriately presented as non-trade receivable through a reclassification entry in the audit working papers. The auditor should satisfy himself that the liabilities have been disclosed properly in the financial statement. So for contingent liability, the auditor should examine the following have been disclosed. First is brief description of the nature of each contingent liability. Second is estimate of the financial effect or a statement that such estimate cannot be made. Third is uncertainties which may affect the future outcome. And lastly, the possibility of any reimbursement. So next is the additional audit considerations. First is the accruals. So accruals occur where the expenditure has been incurred in the current period but not yet paid. So normally, supporting documents, example invoice, are not available at the time of recording of the accrual in the books, since the supporting documents are not yet available. The following audit procedures should be observed by the auditors. First is considering the client's own system, if any, for capturing accruals. Second is obtaining schedule of accruals, ensuring that it is cast correctly and comparing it with prior year accruals and performing other analytical procedures. Third is checking a sample of accruals for correct calculation, referring to supporting invoices in the next period, and lastly is to agree accruals to payments after the year end. So next, additional audit consideration is litigation and claims. So litigations and claims may have a major impact in the financial statement of a company. Thus, it should be properly accounted for and disclosed. So PSA 501 redrafted requires that the auditor should carry out procedures to become aware of material litigations or claims involving the entity. Audit procedures directed to litigations and claims include first inquiry of management and others within the entity, including, where applicable, in-house legal counsel. Second, review of minutes of meetings of those charged with governance and correspondence with the entity's external legal counsel. Third is examine legal expense accounts and examining related source documents such as invoice for legal expenses. And lastly, use and information obtained regarding the entity's business, including information obtained from discussions with any in-house legal department. The next is contingencies. So contingencies may be assets in the case of gains or liabilities in the case of losses. PAS 37 requires that contingent liabilities be disclosed while contingent assets need not to be disclosed if possibility of gain is possible. So when auditing contingencies, the auditor must review the client's records and financial statements for the proper disclosure of contingencies. The auditor is more concerned with the contingent liability loss because management may not wish to disclose them. For contingent assets gain, the auditor should also check for premature recording of the gain. An example of contingent gain that might recorded prematurely would be recording the proceeds from lawsuit the client has anticipated winning before the lawsuit is resolved. The early retirement or restructuring of debt. The auditor should review an early retirement of debt or a restructuring of debt to determine whether a gain or loss on the transaction should be recognized, and if so, that it has been appropriately calculated, accounted for, and disclosed in accordance with the applicable BFRS. Subsequent events. The auditor should review refinancing agreements and liability transactions subsequent to the reporting date to determine their effects on statement of financial position, classification, or on disclosure. So for the summary of audit procedures classified per assertion, first is existence. So primary audit procedures of existence includes performing purchase and accounts payable cutoff, confirming liabilities to debtors, inspecting supporting documents such as contracts, invoices, receiving reports, etc., and lastly, performing analytical review procedures to liabilities and related accounts. So for the completeness, assertion category, the primary audit procedures includes reconciling general ledger and subsidiary ledger. Next is performing purchase and accounts payable cutoff, searching for unrecorded liabilities, and lastly, performing analytical review procedures to liabilities and related accounts. So next is the valuation and allocation. So first is reconciling general ledger and subsidiary ledger, confirming liabilities to debtors, inspecting supporting documents such as contracts, invoices, receiving reports, etc., testing the accuracy of interest expense, interest payable, amortization of discount and premium, evaluating valuation of liabilities denominated in foreign currencies, and lastly, performing analytical review procedures to liabilities and related accounts. So for the rights and obligations, first is performing purchase and accounts payable cutoff, confirming liabilities to debtors, inspecting supporting documents such as contracts, invoices, receiving reports, etc., searching for unrecorded liabilities, and performing analytical review procedures to liabilities and related accounts. Presentation and disclosure. Reviewing compliance with terms of debt agreements, evaluating proper financial statement presentation, and adequacy of disclosure.